What's up everyone, it's Caddy with MoneyVest. So in today's video, we're going to be talking about the entire market updates here. So last week was quite interesting because we did have Jerome Powell talking. We had the unemployment numbers coming out. We had a lot of bond auctions for the treasury market, which is exactly why it was very, very volatile. And I was, of course, traveling the entire week. I was in London, so I wasn't able to essentially kind of break down the markets here. And I do apologize and thank you so much for your patience. I'm back in Dubai and back in my home office. So again, thank you so much. I really appreciate your guys' patience. In this video, I'm going to break down and unpack everything that transpired here in the week here, and also some very interesting analysis and of course, technical analysis on the broader market indices and individual stocks as well. So hope you all enjoy this video and find it helpful. All I'm asking in return is that you drop a like and of course subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below. The first week of the month is the best time to join if you are interested in again getting access to all of our community benefits, including all of our trade alerts and ideas and all the members only videos, as well as trading view alerts and charts as well. So again, links going to be down below. We'd love to have you on board. So this right here is the employment situation. So what we are really looking at here is, of course, the unemployment numbers that came out on the first Friday of the month, which was again going to be on April 5th at 8:30 a.m. Eastern. I was quite literally in my flight at that time, but 303,000 jobs added in the month of March, and that was a significant increase compared to the prior number, which was at 270,000, not to mention the consensus at 200,000, and the unemployment rate basically coming back down from 3.9 to 3.8%. So we're seeing that number again rotate back lower to a more stable and significantly stronger and better number for when it comes to unemployment. Private payrolls increased 232,000. That was up from 170,000 consensus. And manufacturing payrolls basically had no increase, which I'm sure is going to be revised in the next report. But the consensus was 7,000. We didn't actually see any changes in manufacturing payroll. And of course, participation rate at 62.7%. with average hourly earnings at 0.3% for the U.S. economy as well in the month of March. And then finally, average hourly earnings year over year sitting at 4.1% for the month of March as well. So all in all, this is again a very, very strong labor market report. Unemployment continues to be super tight, and that's exactly why the Federal Reserve, who Jerome Powell did speak last week as well, continued to emphasize the importance of having more evidence that inflation is easing before cutting interest rates. Now, as we have talked about before, the reason for the Federal Reserve to cut interest rates is going to come after they've got a solid reason and incentive to pivot policy. And we haven't gotten that reason yet, because if you really think about what's the goal of monetary policy, what's the goal of quantitative easing, it's to support price stability and unemployment goals. If the unemployment starts to go up, if there is any type of a recession in the economy, what does the Federal Reserve do? They start cutting interest rates. If inflation is at a higher level or is elevated and it's higher than what the Federal Reserve's expectations or targets are, what does the Federal Reserve do? They increase interest rates in order to bring inflation down and achieve price stability. So both of those goals are their dual mandate, and both of those goals require different types of approach, and different variables are involved. But the key important ingredient, of course, is interest rates. At the end of the day, the Federal Reserve really only controls interest rates and let market forces and other forces kind of take care of it from there. Now, the reason why they're not pivoting, at least not right now, is because they don't have an employment situation to solve. They don't have a recession problem to solve, right? They don't have any of those situations because unemployment, as we just looked at, is extremely strong. Economy continues to move forward in the right direction. It's still growing. And on the other hand, they have a problem when it comes to inflation. It is coming down, but it's not coming down fast enough. It is still above 2.5%, 2.83% compared to what the Federal Reserve's target is at 2% and sub 2%. So at least not right now, they have no reason, no incentive to pivot policy and start cutting interest rates, because that would in itself would be a significant amount of quantitative easing that the Federal Reserve is not ready to do yet. Although Jerome Powell has mentioned that there is unanimity when it comes to the likelihood of at least one rate cut in 2024, because many FOMC members are believing that there is expectations of, let's say, one rate cut in 2024, possibly more, but that there is some decision, some acceptance that inflation is coming down and the economy can handle, at least one rate cut in 2024. Now, this right here is also when it comes to market breadth. We're actually going to come back to these charts. Really, what I want to go over is, of course, Wednesday's price action was quite incredible, where we did see again a lot of consolidation sideways for the markets here, and then eventually a huge selling pressure across the board for individual stocks, for equities. I was literally looking at my phone. I remember on that day on Wednesday, I was, kind of going around the city using trams with my friends. And I was looking at the market. I was like, wow, they're actually up quite a bit. And then a few hours later, I checked and I was like, oh my God, everything just absolutely sold off. And I think there was a significant intraday swing on that day for the markets here. Again, selling off, I think 1.5%, close to 2% intraday. Now, this right here is the rate cut expectations and how the markets have performed. Now, on average, the S&P 500 has fallen 23.5% over a period of 195 days from the first Fed cut to the market low. So this right here, trading days from the first Fed rate cut to S&P 500 market low versus S&P 500 change from the first Fed cut to market low as well. So in terms of how many days it takes and how much it drops after the first Fed cut, this is what this chart shows. And the average, the bottom line is that we've seen that most of the time, and again, this is the reason why I feel like things might be a little bit different now is because there is a real possibility for a soft landing. I'll explain all of that in just a minute. All these time periods, if you go back, 1989, 1981, 2001, 2002, 2007, 2009, 1974, 2020s, 1987, all these times have what in common? What in common do all these times basically have? Unemployment was high, and the Federal Reserve was actually fighting unemployment, and the economy was looking weak because unemployment was high. So these are great inflations. This is dot-com bubble. This is the great financial crisis. This is the COVID pandemic. This is all of those times when, again, there was possibility for a recession, the R word, which is the recession, right? There's possibility for recession and unemployment was higher. Economy was not doing so well. And what did the Federal Reserve do in order to combat that? Because it's part of their dual mandate, they cut interest rates. And the markets obviously sold off on the back of weaker economic conditions, because all of these represent weak economic conditions. So just because it's happened in the past does not mean that it's going to happen again. The only way this happens is if the economy starts to struggle, we see unemployment start going higher, we see economic growth starting to come down, and we see 2 consecutive quarters of negative GDP, i.e. an official economic recession, and then the Federal Reserve decides, let's say, cut interest rates because we need to support the economy, and unemployment starts to really skyrocket, and that's what the market is going to start smelling, and as a result, start rolling over and start selling off. But this right here, again, is a good study and a good understanding that, okay, on average, it takes about 195 days for the markets to reach a bottom with a 23.5% average drawdown, which is a bear market, after the first Fed cut. But every single one of those first Fed cuts have happened on the back of weaker economic growth, high levels of unemployment, which is not the case right now. We're actually becoming more and more confident, increasingly more confident for a soft landing. And that simply means the economy is strong, unemployment is strong, and inflation is also coming down to the Fed's target. If that continues, even if the Federal Reserve does cut rates, the market's not going to drop on average 23.5%. It's simply going to take that as pretty good news, actually. It's going to be quantitative easing for the market. Economy strong, unemployment strong, and inflation is also coming down. And the Federal Reserve is pivoting towards a more easy monetary policy, and interest rates are going to be kind of lightening up a little bit. So, so in this particular example, in 2024, things are just a teensy bit different because economy continues to surprise everyone and unemployment continues to surprise everyone. And it is extremely, extremely strong at the moment. Now, coming over to some market breadth indicators, this is also a very interesting study. So S&P 500 returns after the percentage of stocks above their 200 daily moving average crossed over 80%. Now, because they're over 80%, over 80% of the stocks are above their 200 simple moving average, that simply means that the momentum is very strong, very positive, and the markets are in a very strong uptrend because majority of stocks are trading above their 200 simple moving average. So, of course, the average return 12 months later is very high at over 12% because the momentum is so strong. And this right here is the average drawdown of about 10.4% 12 months later. And percentage of times that it's positive, it is over 80 to 90%, which is also a very, very significant metric because 90% of the times markets are higher 12 months later by an average 12% when 80% of the stocks in the S&P 500 above their 200 simple moving average. So that in itself is a very strong momentum and broad-based indicator to look at and better understand, okay, that means we're in a very strong bull market and this momentum, this optimism could continue while also keeping in check the overall macro picture. Now, this right here is kind of understanding the Magnificent Seven performance and, of course, the earnings growth for Mag 7 as well. So if you take a look at performance of Magnificent 7 stocks in the S&P 500 year to date, these collective stocks are up over 13%, with S&P 500 X Mag 7, so excluding for these Magnificent 7 companies, 6% green. Overall, it's up 10% because of the weighted average. But if you take a look at earnings per share growth, right, so this is EPS growth, and we're looking at first quarter 2024, once these earnings are going to start getting reported in April and May. So over the next couple of months, we've got the earnings season once again starting. 37% growth is what's expected from Mag 7. That's absolutely wild in terms of how significant that growth is going to be or is expected to be. And a 3% decline in X Mag 7 S&P 500. So it's really just the S&P 500 is being held up by the performance and the earnings growth of just 7 companies. So they're really the ones that are kind of keeping the markets in check, and they're essentially creating a lot of strength behind this momentum are the Mag 7 and the top big tech companies. 24% in second quarter compared to 6% for everything else, and 14% for the third quarter compared to 6% for everything else. And it's not until the fourth quarter of 2024 we see that flip over, we see that change for Mag 7 earnings only growing at 15%, for everything else growing at 18%, because the comparables are going to be much higher for those companies as well. So something to keep in mind. Again, this is still the time for Mag 7. No doubt tech is still performing really well, but there will be a time for a switch up in the market, and I'm sure institutional investors and traders are going to be looking at this data point and thinking about it. Okay, earnings growth is slowing down for Mag 7. Perhaps it's time to start looking elsewhere because of that significant earnings growth potential in other parts of the market as well. Now, going over to S&P 500's Bank of America research, so 26% gain over those 5 months. So S&P 500 so far, 26% gain over the last 5 months puts this rally in the 98th percentile of history since 1936. And very similar type of analysis we also discussed in one of my previous videos. So that just goes to show that this is a very, very strong market. Right? There's a lot of breadth, there's a lot of momentum, there's a lot of optimism, there's a lot of positivity, a lot of cash sitting on the sidelines. And for that reason, we just have to be a little bit more cautious in our approach. Obviously, everybody who's kind of betting on this momentum continuing and for it to keep going forever is going to be very much disappointed. And that's exactly why over here at MoneyVest, I'm here to provide you with an objective, real analysis and to tell you, look, I'm bullish, right? I'm long on most stocks. I never short anything, right? I never short any stocks. And for that reason, if I'm long, if I'm bullish, of course I want my money to grow. I want the markets to keep ripping higher. It would be great if the markets could keep pushing up 4 or 5% every day for the rest of my life. That would be fantastic, right? I would be a very rich man. But at the same time, I cannot be in that delusion and expect the markets to keep going up every single day, because I know how markets work. I know how cycles work. And it's just an understanding that, okay, overbought, premium valuation, expensive, multiples. And perhaps it's time for us to be a little bit more cautious. Perhaps it's time for me to kind of de-risk a little bit, lighten up on some of the positions, take some profits off the table, and then, of course, wait for better and better opportunities. Because patience is underrated. In the markets, patience is very underrated because everybody who wants to make money in the markets wants to make money tomorrow or yesterday, right? So patience is a very underrated skill in the markets. And one of the best quotes from Warren Buffett, from the greatest investor of our time, on patience is that you can't create a baby by getting 9 women pregnant, right? You can only create a baby by getting 1 woman pregnant and waiting for 9 months, right? So that is one of the best quotes on patience. So it's really, really important for us to wait for the right opportunities, wait for the right prices to come to us, and then deploy cash, then take action. So anyway, for on the day here, Meta here up over 3%, Google pushing higher, Amazon also very much green, Nvidia, Microsoft pushing up, Tesla still struggling a little bit. I did a video on Tesla recently. A lot of people said that this was a clickbait title, even though literally the title was the same as what was being discussed in the video from the same report that I was breaking down. For some reason, most people thought that it was clickbait. I literally just said Tesla to $14 or could go bust. Those were the exact words in the report that we discussed in that video. So anyway, but Tesla here down over 3.6%. I will be doing a separate, more dedicated video on Tesla as well. But the overall market, again, very, very green, recovering higher after Thursday's sell-off, because Thursday was actually pretty brutal, if I'm not mistaken. Thursday, the markets were down a little bit over 1.2, 1.3%, and of course, pushing higher 1% on Friday. So most sectors, all 11 sectors were green. And again, we had over the last 1 week a little bit of a split market. In the last 1 month, again, split market with energy, comm services, materials, industrials pushing higher, with again, healthcare, real estate also selling off. So overall, again, we have had a little bit of a split market. And then if you take a look at the performance of futures, just 1 second here. So if you take a look at the performance of futures, cocoa, coffee prices, lean hogs, wheat, soybean, gold, canola, all pushing higher, with platinum, sugar prices, live cattle, feeder cattle, orange juice, and palladium selling off, and Bitcoin here just over 68,000, and Ether just over 3,300 as well. So a little bit of a momentum, of course, in the markets recovering back higher. If you come take a look at crude oil, we continue to push up over $86 a barrel. So next resistance and target is going to be at $93 a barrel, and that is perhaps going to be a little bit more concerning, because we've talked about this in our previous videos, and how crude oil is a very, very important metric for the overall market, because as it continues to move higher, it's going to put more and more pressure on overall inflation. And that's exactly what we don't want. We want inflation to move in the opposite direction. We want it to come down so that the Federal Reserve feels more confident and then starts potentially cutting rates, which is going to be helpful for the overall economy and for the markets as well. But if crude oil continues to move higher, it has an indirect role to play for inflation and for prices, expectations, and then that's really going to create a very sticky situation when it comes to prices and inflation in general. And that's something for us to be aware of as we continue to move higher for crude oil. Since 2024 began, crude oil prices are up over 26%, which is no joke, and that's going to reflect in the overall inflation numbers sooner or later. If you come over to the monthly chart, take a look, 4 consecutive months of green for crude oil since January of this year. Literally this year, we have not had a red month for crude oil. It continues to move higher, now over $86 a barrel. So definitely something to take note of and keep in mind, and be cautious with where inflation is at the moment. So that's going to be inflation for crude oil. And then if you come take a look at volatility, so we are seeing a little bit of a pullback down 2%. Now on Thursday, we did see a huge spike in the VIX, up over 14% for volatility, so pushing back over 16 at the moment. So next resistance or target or a level to really be patient and wait for is going to be 18 to 20. So those right there are going to be some levels to keep in mind inside this green rectangle for volatility, with of course the support level staying put at 15, but we are above 16 right now, which is good, which is really good. And that's exactly, like, I literally want to just hold someone and be like, this is good, this is good, this is exactly where we want volatility to be. We want it to be higher and higher. We want it to be 18, 20, 25, 30 levels, because this is what's going to create that buying opportunity for us to deploy cash at the right prices. Because as I mentioned before, when VIX is high, it is time to buy. When the VIX is low, it does not necessarily mean that it's time to go, but it means that we have to be cautious and alert and aware of where the markets are and volatility is. Because we've really seen the volatility so low for such a long time. And now finally we're starting to see a little bit of a spike. And the next target we're watching at 18.20. All the way up to 25 plus. And again, if you want to get access to all the trade alerts and ideas that I send out in the Discord, link's going to be down below. We'd love to have you on board. And I will be sending out some good alerts when the volatility is high, and start taking advantage of those market opportunities once again. Talking a little bit about S&P 500. So we did see a brief breakdown below that 21 EMA. So we were obviously kind of validating that support once, twice, 3 times, 4 times, 5 times. We continue to kind of trade in that uptrend. And right now we're seeing a little bit of a pullback of over 1.2%. And that 50 SMA is going to be the one to watch at 5,000. And of course, if we do continue to see a little bit of a bigger breakdown, then again, we are going to wait for those opportunities for when the VIX is high, and S&P 500, of course, is lower, for us to start deploying cash back into the market. But that 50 SMA, very, very important level to watch. Same thing with the NASDAQ here. So support level is going to stay put at 15,900, 16K almost. And right now kind of sitting inside this red rectangle, and the resistance at the moment, so starting to consolidate sideways. So if you do see a little bit of a breakdown below this, next target is going to be closer to 15,500, 15,400 for the NASDAQ as well. Talking about Apple, and Apple here continues to consolidate sideways, and we continue to kind of witness a lot of accumulation, in my opinion, as Apple continues to be down over 15 to 16% from its all-time highs. Next resistance and target is going to be closer to 196, 197 for Apple. And right now, the trade idea is still taking a little bit longer to play out, but it's still in play, I would say, because of how consolidated pattern is, how much support there is for Apple. Of course, if it does end up, let's say, breaking down, next level is going to be that tier 2 support sitting roughly in the 150s, where I would be a lot more aggressive, and that's going to be the second trade idea, trade plan for Apple moving forward. Amazon had a huge breakout, and it continues to move higher very, very nicely to 185 now. It's almost approaching its all-time highs after such a long time. So if you take a look, 20-for-1 split. We've been talking about 4K Fridays for such a long time. So if I do 185 times 20, we're at 3,700, folks. We're at $3,700, only $300 away from hitting $4,000. And 4K Fridays are going to be back, because we are going to be at 4,000 for Amazon fairly soon here, in my opinion. Amazon, as I mentioned before, is, in my opinion, one of the higher growth companies for the long term. As I mentioned before, I was actually watching a documentary on the plane of how Jeff Bezos started Amazon. I know the story, but I was watching it in a little bit more detail. He used his door as a table, as a desk, and when asked why, he basically said that I want to spend money on what the users need, basically what the users actually demand of us, on the essential stuff, on the necessary stuff, and not the things that don't really matter. It doesn't matter if I'm using a door for my desk. What matters is that we build a company that is very customer centric, and we are constantly thinking about the customer and what they want, in the future. So that would, again, kind of very humble beginnings. Started from Seattle, Washington. Started from a garage. Jeff Bezos and McKinsey, again, and to an idea of where it's now at almost $2 trillion. I mean, kind of makes you think, right, how far this company has come. And it's only the beginning. I mean, profitability-wise, it's only the beginning. So I think it's got a long way to go. And resistance is going to stay put at 188, so that's going to be that next level to watch. And the support level staying put at 178, 179 for Amazon. Tesla, I'll be doing a video on very soon. So I'm actually going to skip over Tesla here in this video from a technical analysis standpoint, because I want to go over this in a lot more detail. But bottom line is, of course, the momentum continues to be very, very weak for Tesla as it continues to get sold off here and selling off down to 170s, 160s. Nvidia, on the other hand, consolidating sideways. So this right here is going to be the range within which Nvidia continues to trade. Resistance is going to be at 971. Support level at 841, 845. Of course, we got that 300 SMA also sitting at 795 for Nvidia. And as I've already discussed, again, there is some negative divergence. There is some overbought conditions, which could result in a pullback for Nvidia as well. Advanced micro devices really selling off. We did see a little bit of a pullback, then again consolidation sideways, and then broke down even further, down about 8% on Thursday. So I will be doing a video on semiconductor stocks as well, and more specifically AMD and Nvidia. We'll talk a little bit about those companies as well. And again, support level is going to be down at $164 for AMD as well. So moving forward to PayPal. PayPal here on the day was up over 95 basis points, but mostly consolidating sideways, and at that support resistance going to be all the way up to $68. So that is going to be that resistance to keep in mind for PayPal. Again, lots of consolidation sideways. We discussed PayPal in a little bit of detail in our previous videos, and resistance again is going to stay put at $68. And of course, the next level to keep in mind support-wise is going to be $65 down to $57 for PayPal as well. And again, it's really going to come down to a breakout, whether there's going to be a breakout of $68 or not, all the way up to 76, 77. That's when we're going to see a potential change in that overall direction and some higher highs and some higher lows. And in order for us to see that, PayPal needs to break out over $68. Visa, on the other hand, continues to consolidate sideways. So we're seeing a little bit of a pullback over here down to 273. That's going to be that support level to keep in mind. And of course, we're seeing Visa pull back a little bit. That's normal considering how much it's rallied as well. RSI, MACD, as well as the L3 banker oscillator, everything pulling back and coming down at the moment. Meta here, on the other hand, breaking out to new all-time highs at 530. So very strong breakout to the upside. Support level is going to stay put inside this green rectangle over here for Meta, and again, that's going to stay put between 455 to 477, and resistance is going to stay put at 517, which is now going to turn into a support for Meta as well. So that is going to be that support level to keep in mind for Meta. Talking about Netflix, and Netflix here pushing higher to 636. So we're seeing a little bit of a breakout to the upside over 636 for Netflix. Support level is going to stay put at 596, close to $600 per share, along with that 50 simple moving average for Netflix as well. So those right there are going to be some levels to keep in mind for Netflix here. Google, on the other hand, we're seeing a little bit of a pullback once again, up over 1.3%. And again, resistance is going to stay put at 157. That's kind of in line with that target. And this was a part of our trade idea that worked out really well. And support level is going to stay put at 131, 132 for Google as well. So lots of consolidation sideways in that range for Google. Talking about Microsoft, and Microsoft here pushing higher. Next target and resistance is going to stay put at 430. So this right here is going to be that level to keep in mind, with the support level aligned with that 21 EMA, 50 SMA, as low as $420, $419. And of course, a much stronger area of support along with that higher low, sitting sub 400, closer to 394, 395 for Microsoft. And finally, we got Enphase, and Enphase here pulling back, significantly down about 7% after a huge rally on the other day. So Thursday pushed up, over 14, 15%, and then rolled right back down, coming down to about 7% lower. And support level is going to stay put at $108. And I will be doing an updated video and analysis on Enphase as well, because it seems like their CCO stepped down, and the IQ8 microinverters have also been shipped, and they've kind of entered a new market as well, which we will discuss in a more dedicated video for Enphase. But support level is going to stay put at $108, resistance all the way up to 138 for Enphase. And finally, we got Costco, and Costco here continues to sell off. It is down a little bit over 9% from its all-time highs. Support level is going to stay put roughly at $678 up to $713. We're seeing a lot of consolidation sideways for Costco as well. So hope you all enjoyed this video and a complete update on the markets. Make sure that you drop a like, subscribe to the channel, and I'm back in my office here in Dubai. I do have some travel plans coming up again, but I will try my best again to keep up with everything that's going on in the market. I do really appreciate your guys' patience, and make sure that you drop a like and subscribe to the channel. Again, the first week of the month is the best time to join if you want to be a part of our MoneyVest community. If you have any questions, feel free to reach out. And as always, happy investing. I'll see you all in the next video.